Hey everybody, Tina here. If you're an advisor looking for that one conference that gives you inspiration, connection, and proven best practices to grow your firm, Excel is the place. And it's happening September 13th to 15th in Las Vegas at the beautiful Cosmopolitan Hotel. I attended last year's event and cannot wait to be there again this year. The lineup is jaw-dropping. So head on over to Excel Conference, that's Excel with 2 L's. Check it out and use my discount code POWEL200 to receive $200 off the price of your ticket. See you there. Hi, this is Tina Powell, host of In the Suite, where I sit down with top women leaders and some of the biggest names in the financial services and the wealth management industry. Together, we'll discover some of their best secrets and top strategies to grow great business, build a strong brand, and lead teams in the 21st century. I hope you'll enjoy hearing their amazing personal stories of triumph, trepidation, and transformation in hopes of becoming better leaders ourselves. The time for you to lead is now, and you're in the suite. Joel Bruckenstein is widely recognized as one of the most influential financial technology journalists and consultants in fintech. Known as FinTechie on Twitter and regularly featured in Barron's, Financial Planning, REA Biz, InvestmentNews, and WealthManagement.com for his expertise, Joel is an industry powerhouse and a leading authority on breaking news and emerging technologies. Joel is also the producer of the annual T3 Advisor Conference, the premier technology conference for independent financial advisors, as well as the T3 Enterprise Conference, an annual gathering of top executives from independent broker-dealers and large RIAs. In May of this year, In the Suite was given a front row seat and VIP access to the highly anticipated 2022 T3 Advisor Conference and Enterprise Day in Denton, Texas, May 3rd to 5th, where we joined Advisorpedia, InvestmentNews, ThreeCrowns Copywriting and Marketing, and Impact Communications, covering all the action for the largest T3 ever in history. Thank you, Joel Bruckenstein. In this amazing episode recorded live at T3, you get to ride shotgun with me in the suite as we sit down with fintech leaders and mega giants like Eric Clark and Dr. Daniel Crosby at Orion Advisor Services, making major news at T3 about Orion's use of Amazon Redshift and behavioral finance innovation known as Protect, Live, Dream. We also talk with Evan Rapoport at SMArtX Advisory Solutions about their groundbreaking $30 million strategic investment by Morningstar. And we sit down with Kate Healy, now Managing Director of the CFP Board Center for Financial Planning, to learn all about pro bono financial planning and the Foundation for Financial Planning. But wait, there's more. Mac Bartine, CEO of Smartria, joins us to talk about enterprise compliance management. Rich Cancro, CEO of Advisor Engine, talks about customization, personalization, and the growth of CRM. And you'll also get to hear from these forward-thinking leaders disrupting the status quo. John Makowiak from Advison, Patrick Reed from YourStake, Akshay Singh from IndieFin, Nitin Seth from Incedo, and Henry Zalakowski from SoftLab 360. We hope you enjoyed this special T3 compilation episode all about fintech in the suite. Wow, Eric Clark and Daniel Crosby, take a seat in the suite. It is so great to see you both. This is amazing. T3 technology tools for today just came out of your session. Oh boy, really super big news from Orion. I think you guys do explain it a lot better than I can, but mind blown, Eric Clark.
Well, thanks, Tina. You know what? We couldn't be more excited and pumped up to get our advisors Protect, Live, Dream, this revolutionary framework at helping clients understand what resources they have, feeling secure about those resources, and segmenting their wealth in ways that will drive additional connectedness between the advisors that we work with and the clients that they serve. We think this is a game changer, bringing together the best of fintech with the best of behavioral finance.
Yeah, that's what I saw. I mean, certainly the stats, Daniel, you were up there, a lot of interesting stats, but more so how you really combine this idea of goals-based approach with the behavioral finance. Will you please talk about how this is a total game changer for the industry?
Thank you, Tina. Great to be here. So what we are trying to do at Orion, we did some behavioral finance myth busting today, and Eric helped me take on some widespread misconceptions. There's been this idea that we need to correct our clients' incorrect behavior. We need to let them know how silly and foolish and irrational they are, and then help them white knuckle their way past it, hanging on by the skin of their teeth. We think there's a much more adaptive, a much more positive way, and that's by leaning into client behavioral tendencies, even ones that are widely hated like fear and greed, and helping frame that fear, helping frame that greed in a way that shows that we, the advisor, have taken care of it en route to better investor outcomes. So we think this is a kinder, gentler approach to behavioral finance on the one hand, and secondly, and perhaps more importantly, it's embedded. Behavioral finance in our industry has traditionally been approached from an ad hoc, a little here, a little there perspective. It needs to be baked into everything we do. And it's been my joy to work as part of the Orion team because I've gone from that seat of being the here a little, there a little guy to the person who's helping to bake it into the very fiber of everything that we're doing. And I think it's going to yield powerful results.
So with that, obviously, Orion is known as a fintech leader. So you've not only combined the thesis of your approach, but now you've taken it and you've integrated into the technology as its own product, right? Into Orion Planning. I'd love to hear, I love the name. Can you tell me how you came up with the name, Eric? That's great. It's so different. I think how refreshing it is for the industry to have now this new technology, but with just a packaging that advisors that make it very easy for an advisor to just start to integrate it in their practice. It's already a part of Orion Planning now, right?
That's correct. So Protect, Live, Dream is baked into Orion Planning. I have to give Dr. Crosby 100% of the credit with regard to the naming of Protect, Live, Dream. Right away, when he and I sat down a year and a half ago, we started talking about how the industry has done such a great job at solving the investment problem. What steps could we be taking as a tech provider to the best advisors in the country at helping them solve the investor problem? And this was one of those projects that, quite frankly, we started out with some ideas, a thesis. We started brainstorming with those advisors that we serve, and we ended up in such a transformational spot that we're incredibly excited about the opportunities that this presents to our advisors to better connect with the clients that they serve.
Yeah, it's so aspirational, right? Was that part of your thinking when you were naming the products and also giving the idea for an advisor to work alongside the client and even add buckets?
Yeah, so one of the things that we know about clients is that they have multiple simultaneous risk preferences, right? They want to avoid low levels of wealth. They don't want to eat cat food in retirement. But they also have big dreams. And that's true of all of us, right? We have fears, we have a need for safety, but we also have big dreams, and those things can coexist simultaneously within an individual. And we as an industry have candidly not addressed those multiple simultaneous risks and preferences. And that's what we're trying to do here.
And there are a couple of other things. There were an important point that I took away from my notes also in your session. I couldn't write fast enough. And you had talked about an Accenture study, right? This idea of that advisors need someone who gets me, and that we all need a buddy of some sort, right? How are now advisors going to take Protect, Live, Dream and be that buddy to the client?
Yeah. So one of the things that Protect, Live, Dream does, I want to cite the actual study, right? So it's an Accenture study that Gavin Spitzner turned me on to. 91% of clients say the number one thing they want from an advisor is someone who gets me, someone who understands me. The second most common answer was someone with whom I share values. And the third most common answer was someone basically I can connect with personally and socially. That's what Protect, Live, Dream is all about. It's about a semi-structured framework for having deep conversations that touch on preferences, that touch on fears and dreams. And this is how we connect. And tech can be a guiding force. I'm a big believer that the soft skills have hard impact and that tech can be a force for good in streamlining and positioning those conversations and letting the advisor's natural skills, empathy, and training take it the rest of the way.
So Eric, another question for you is how you have always managed to stay ahead of the curve. So you talked about this initiative with Daniel going back a year and a half, right? We've seen such volatility in the pandemic, but now I think it's a new world. How have you always managed to stay ahead of the curve? I've been following Orion for over a decade now in my career. And I sit there and I go, wow, how did he know? How did he see the writing in the tea leaves?
Well, we love to be innovative at Orion. We get our very best ideas from the advisors that we serve. I have to give Nick Stonestreet at Ron Blue Trust a lot of credit. He really emphasized the importance of being able to segment or bucket wealth and the impact that had on the clients that he serves. So I have to give all the credit to the advisors, to a team back at Orion that embraces those innovative ideas, puts them into action, helps our advisors be disruptive in the marketplace and essentially win more than their fair share of business opportunities.
Okay, one last question for you both. What else can we expect from T3 here?
I think, there are a lot of opportunities for us in the future to take the incredible thought leadership that Daniel has, implement those within the technology. Look, we're just at the beginning of bringing together the best of wealth tech alongside the very best thought leadership in behavioral finance. And this is a journey that Daniel and I are both committed to, and we're just getting started on it together.
Fantastic. And look forward to that webinar. This episode will probably come out after the webinar, but I love how you've made some resources available. So we'll make sure that we put a link in the show notes. And I know that our friends at Orion are always welcoming to giving advisors a demo. And again, I applaud you on this announcement and the fact that it's not an upsell to advisors, the fact that advisors can take it right from the get. Yep. Exactly. No upcharge. So that's great. So congratulations to you all. I'm just huge admirers, big fans of your work, and I have the utmost respect for both of you and what you've announced today. Congratulations.
Thank you, Tina.
Wow. Evan Rapoport, take a seat in the suite. It is so fantastic to see you here at T3. So can't wait to talk to you. Saw you on the main stage today. It's a big day for SMArtX. You announced some groundbreaking news. So I'll let you take the floor.
Let's be honest, Tina. The honor's mine to be here because this spot is coveted. So I am lucky and honored to be here. Thanks so much, Tina, for having me on your podcast.
You're welcome. You're welcome, Evan. Congratulations. One of the themes here is groundbreaking news here at T3. It's taken us 2 years to kind of get back in person. And I don't know if you saw my retweet, but SMArtX, you announced a very important piece of PR. So what is that, Evan? Congratulations to you. Morningstar.
Uh-oh, well, you just said it. Now you can just say the release. I don't even need to say it. Tina just gave it to you guys. So two things. One, you did the tweet. I did a retweet of your tweet because it was so great. Thank you so much. And we're lucky, right? We're excited to have great partners at Morningstar, both on the commercial side and now on the investment side. So Morningstar has decided to invest $30 million into our firm.
Wow.
They've taken our entire Series D offering for themselves. We could not be more excited and have better partners who are truly great people. Just a wonderful firm with a lot of resources and a lot of great tools that we're going to help to enhance using SMArtX technology and expand them. And so I think for both firms, it's a huge win and a really great marriage.
Well, congratulations. I mean, mean, I know that for the last couple years that we've been involved with SMArtX and watched you from afar. It's incredible to see this like momentum, and then also to this like acceleration effect that we're witnessing right now. I was also part of your session, and you announced the fact that you're the TAMP behind the TAMP, and I don't know if everyone knows who SMArtX is and what SMArtX does, because there are two important facets to your business. So can you talk about first what SMArtX does for financial advisors?
Sure. That's a great way to break this up, Tina. She knows our business so well. So we have two sides of the house. We have the enterprise solution side, and then we have the direct to advisor side of the business. So that side specifically is one where we act as a TAMP. We have a turnkey asset management platform. That's what the acronym stands for. An investment platform, if you will, where advisors can come. They can look for models or separately managed accounts, put them together in a unified managed account, a single account. They can look at all the analytics on those profiles and of those models. They can run back tests and proposals and do rebalancing and tax loss harvesting. I mean, it is a complete solution with a lot of great tools, and they're easy to use, which is most important. But a lot of people in this industry, they don't come from the industry, right? And I think that's the hard part. You're building something for a client, and you've got this perception of what you think they would want. But for me, I have been in this industry since I came out of college, right? I still have 9 or 8 securities licenses, and I use these tools, and I was frustrated because they didn't do what I wanted them to do. And so I knew there could be a better solution. Unfortunately, there were not, so I had to build it, right? It wasn't out there.
No, it wasn't, because I was in the wealth management space, and I have to tell you, we used to cobble together. If we had SMArtX, and I kid you not, and this isn't an advertisement, this is the truth, because even as a marketing expert here, I can go into the SMArtX platform right now and I could run a portfolio report myself, or a proposal, more importantly. Advisors get new, whether or not it's G2 or G3 assets, they get new clients who want something different. The reason why an advisor switches is because, number one, their advisor never talks to them, never heard from them. But the other thing is that they're looking, especially now, Evan, into the future of investments. And SMArtX is, I'm able to query through a particular strategy. I'm able to query through a particular manager. We never had that ability. It would be like if you needed something, you had to vet the third-party manager. You'd have to say, oh, okay, this one does like muni bonds or whatever. And so you would have helped to increase our business, which we sold, quite thankfully. And we did well. And so that's how I look at, that's what gets me so excited about the product.
Thank you. Yeah, I mean, it really is about scale and efficiency, right? Advisors, they shouldn't spend a lot of time on investment management.
Absolutely.
Advisors aren't analysts, right? They're planners, right? They're salespeople very often, right? And they've got a job of relationship management. And the job and the role of an advisor is so vast, right? There's so many things that we have to do that taking investment management off the plate is incredibly helpful to not only free up the time, but to also provide great performance. Like truly, as an advisor, if I'm watching Apple and Apple earnings, I'm not really going to add any value if I think it's going up or down. I mean, come on, who am I versus the 100 Ivy League educated people who are talking to the people who work at the Apple, and they're doing the channel checks and all these other things, right?
Yeah.
So third-party asset managers do a great job because they are well-resourced and they focus on this every day of every week of every year. As an advisor, you don't do that. And so you're not going to come out with the same outcomes as these third parties are. And it's hard, as I was a broker first and then moved to an advisor, and it's hard sometimes to get away from trying to pick stocks because it's so ingrained in what you've done your entire life. But you move over to picking strategies and to picking managers and products, right, as opposed to individual equities. And I can tell you, and this is interesting, we've recently run analysis within our system because the markets are so turbulent. And we look at the advisors who are managing their own money in proportion versus those who are managing or using third-party asset managers. And we've got one firm, for example, who has 92% rep as a PM. So they use very little third-party asset managers. Let me tell you, they are by far the worst performing group in my entire system. Not even a question.
Incredible.
Oh, yeah. the hard facts are, the facts are there, the numbers are there. They're hard sometimes for the advisors to digest and understand, but it's true. You should outsource not only because it makes you more efficient, but it gives your client better outcomes. And the last part, which is also important, is that clients pay for this service. They pay for mutual funds, they pay for hedge funds, they pay for investment products. That is justifiable and normal, and that's the way that it should work, right? But as an advisor, you shouldn't bear all of that work and then have the expense, right, of setting up trading and insurance and all the other things that come along, when you can outsource that for not only the better outcome, but also the clients, paying for it. But again, you're not taxing the client. It's a fee that they would normally pay anyway if you were using mutual funds or hedge funds or any other investment.
That's right. And another interesting thing that SMArtX does that, again, we had to utilize an outside party, and that is that when advisors were working with SMArtX, that you guys are doing the trading, which that in itself would have alleviated such a resource constraint inside our firm. We had a dedicated person, but what happens when that person needs to do other things, and what happens when
they
volatility? Exactly. But even
the bathroom?
Yeah, exactly. Right. And the other thing is that you said something very interesting that really stuck, and we saw this with the pandemic, is that what if I want to sell? If your clients ask you to sell, then the client should be able to get out of that position that day.
So now we're talking about, which is good, it's a good transition, right, to a whole nother problem in the industry, okay? And I made a statement that's really strong yesterday, and I said the TAMP industry is broken. And it's broken in so many ways, in my opinion, but one of the biggest problems and one of the issues that we saw for right at the onset was latent trading. And even then, 7 years ago, markets were still volatile, as they have been. But 50 years ago, 30 years ago, the markets weren't so volatile, and asset managers maybe traded their portfolios every quarter, right? That's not the case today. Managers are tactical. They buy when the market's down. They sell when the market's up. Well, today, the markets are up and down every day. In a very short time frame, that one position can move 3, 4, 5%. And if you try to trade it in anything but that specific time where the manager told you to trade it, you're going to be off, right? So the first problem we have is manager dispersion, because the TAMPs are trading typically 2 windows in a day. And if you miss the window and the cutoff, you miss the day, you go to the next day. Sometimes you go to the day after. Well, I can't trade an hour right after someone and try to get the same performance. Forgetting 4 hours or the next day or 2 days in a market that moves at 2-3%.
Yeah, it's crazy.
That's broken, first of all. The second problem that you referenced, Tina, is the liquidity, because the other TAMPs are going to require you to wait a day or two to do the trades, as we've just discussed. But my client called me and he just said, "Get me out. This market is really bad, and the macro picture's really horrible. The supply chain, I think everything's just doesn't look good, and I don't feel comfortable, and I'd rather be in cash. Take me out." And you go to your TAMP and you say sell. This is a true story, by the way. We've had this happen. And you don't get out for 2 days. And in those 2 days, the market drops, and suddenly you're down 8, 9, 10% during the pandemic. And so then you finally get out, and you go to the client, and you give him his execution, and you tell them on their $3 million account that they just lost another $300,000.
Oh, it's huge.
And they finally made the decision to pull the trigger and get out. It was a hard decision for them to make. And they said, "You know what? I just don't feel comfortable, I want to get out." And you just lost them another 10%.
It's huge. And that's really all fascinating. Well, thank you so much, Evan. I know also we'd want to make sure that people have your information and SMArtX's information, because there's also the enterprise side of your business. You've got John Pincus, President and COO at SMArtX. So you're able to work with a small independent shop, but then you're also able to be that enterprise platform within and serving like a multitude, hundreds if not thousands of branches.
We talked about the one side, which is we serve the traditional TAMP, traditional RIA, several $100 million, et cetera. They come to us, great customer service. We'll handle the trading, the billing, the investment management. We even have OCIO services, so we can help them to pick the portfolio and handle their investment process and such. So we can really go the extra yard for the independent group. But we work with a lot of enterprises like Morningstar and other large firms, Hightower, et cetera, where they may want to have their own solution. Okay, a firm like Morningstar has their own TAMP, and what they do is is use SMArtX technology to power that team. So you don't have to use all of SMArtX. You don't have to be a front-facing customer in the way that an advisor is, but instead you can use the SMArtX components via our APIs to build your own solution. And for those providers out there that have a big client base that potentially want to have some managed accounts in the same place, you can take the SMArtX services, add them to your existing services as a provider, and enhance your offering, and also make more money as a provider while giving your client what they're looking for.
Right, that's a big
what we
thing.
love to do.
Yeah, you had asked an interesting question yesterday, and unfortunately no hands went up, but I think it's characteristic of a lagging industry, and that is how many advisors, clients are asking for crypto, and how many actually have crypto positions available. Again, I see it as like, if you're managing for the next generation, that's going to come up in a conversation. You need to already have a strategy and have a plan of attack of how you're going to fulfill that request. Otherwise, you're going to lose that business.
They're asking for
That's
it.
what I see. So that's what this podcast is for, right, Evan? We want to get great solutions in the hands of people that need it, but more importantly, people that are willing to take a risk and act bold.
Perfect. Well, you know what I was thinking about the crypto side was that maybe there were a lot of providers in the audience, and that's why that nobody raised their hand. It was there were less advisors and there were more providers. Because in my experience, like you've said, I mean, we get a lot of questions about crypto. It's inevitable. If you even look at the U.S. population, a good portion of it owns some degree of cryptocurrency. And so it's not going away. I do believe everything will be tokenized going forward, and so you better get ahead of this train. Tina knows that I'm a long-term crypto investor. I have been for a long time, and I certainly believe in that asset class as a nice way to diversify your client interests. I think it's an asset class you can't avoid, but certainly up to you and your clients' risk return objectives and their tolerance. We're going to add it to the platform as in a separately managed account format, so I think it's going to be really exciting to give advisors access to a product that they have looked for to gain access to and haven't been able to. So that should be rewarding for those that are looking for it, and exciting for us to be able to satisfy that need.
Well, thank you so much, Evan. We'll have a link to smartxadvisory.com, and of course you're on social too, so that people can follow your work. And I want to thank you so much. Congratulations to you on SMArtX.
Thank you.
On the great news and continued success, Evan Rapoport.
Thanks so much, Tina.
You're welcome.
Have a great day.
You too.
Appreciate it.
Thank you, Evan. Wow, Kate Healy, take a seat in the suite. It is so fantastic to see you here at T3. Wow, we're back. The conference is packed. There's about 1,000 people here, and you're always someone that I want to talk to and connect to. We've been friends for years, and you're always doing such incredible work in the industry that we want to talk about and illuminate here in the suite. So how are you doing?
Oh my God, first, Tina, thank you so much for having me. It's so nice to do this in person. Our last podcast was over Zoom or whatever, and so it's awesome. It's great to be here at T3. It's so great to have the energy, to be back in Texas, all of this. It's fantastic. So thanks so much for having me on this podcast. I'm so excited to see everyone and talk about what we're doing and learn about all new technologies. I feel like we were all in our own closets for 2 years, and now that we're all back, we can just start collaborating again in a much bigger way, which is awesome.
Yeah, and I told Rachel, who's assisting today on the podcast, I was like, that's Kate, and she's one of my sheroes, and getting our sheroes here in the suite is fantastic. And I'm sitting here with a piece of yellow calcite. You guys can't all see, but you should definitely Google yellow calcite. And Kate reminded me to just take a breath, because the cadence has been, it's been a lot getting back in person and all. And I know wanted to talk to you and see what kind of sticks out in your mind being back here at T3. The last time that we saw each other here was a couple of years ago. So what are you noticing?
It's awesome. I'm noticing how many people are here. It's bigger than I thought it would be. And honestly, no disrespect to anyone who's speaking, because they've all been great, but there's so many conversations happening in the lobby of the hotel.
Yeah.
Which is so awesome, because so much of what we do obviously gets done over relationships. And it's literally there's a buzz. And there's something so important about having a buzz around. And that means that people are connecting and sharing ideas, and there's going to be some really cool stuff that we're going to start to hear about in the next 3 to 6 months, which always makes me excited. So it's just been great to see the ecosystem is even growing. growing. Right?
Yeah,
There's different kinds of companies here. It's not just, I think people just think of T3 as technology, and it's so much more than that, because technology is embedded into everything that we do. That's why I'm here with the Foundation for Financial Planning, which no one would ever connect why the foundation would be at a technology conference or what's perceived as a technology conference.
Yeah, so
really
I'm glad.
cool.
I would love for you to draw that connection beforehand for anyone that is not familiar with the Foundation for Financial Planning. We have listeners in over 1,000 cities, 54 countries, and one of the goals of this podcast are akin to your work at the Foundation for Financial Planning, and that is getting financial planning in the hands of more and more people. So if you could tell everybody what the Foundation for Financial Planning is, and then I want to also too talk about why is it that Foundation is here at T3?
Yeah, so the Foundation we're actually over 25 years old, and we are in existence to really help bring financial planning, pro bono financial planning, one-on-one financial planning to the underserved populations. So it's phenomenal. We work with so many volunteers, so many CFPs volunteer for the Foundation, and the Foundation is really a conduit, right? We help match people up with opportunities. So we work with nonprofits who help bring us people that need help, and then we work with the CFP board and the FPA to help us find qualified CFP professionals. We have a site called probonoplannermatch.org where anyone can go and look for opportunities to do pro bono. We've got 50 different types of opportunities, from as little as an hour of your time to something if you want to be more substantial and work with a family who's been affected by cancer. You can meet with them 4, 5, 6 times. We know some people who just feel so involved that they stay with the family for a year or two because they feel so good about giving back. But it's really about giving that access that we all give to our clients to people who don't really know about us or don't have the means or don't think that they have the means to work with a financial planner. And we've worked so hard to make financial planning a profession, and pro bono is the stalwart of any profession. And so the more that we can do to show that this profession gives back in that way, it's better for all of us to raise the visibility and just the perception of what all financial advisors do.
And you are the board chair, which is the most important position there is. And so I want to say that through your own Herculean efforts and advocacy, that it has been able to reach more people. You're also an award judge for the Think Advisor Luminary, and I believe that there's also like a social good award around that as well too. So let me first ask my other question, which is how we started, is that if the Foundation for Financial Planning stands behind pro bono work and is doing so many things for the advisor community, what does bring you here to a T3 conference?
Yeah, so first, I'm just going to take one step back. I'm going to answer that question. Okay. But you said that I'm the most important position. That is so not true. Okay. Because the CEO, John Dauphiné, and the staff at the Foundation have done amazing things. I'm a volunteer. I kind of step in and I've got some time and I've been working with them, but the staff does phenomenal things about setting up programs, helping us. We've got people that are in charge of getting our donors, marketing, communications. We've got some great pro bono partners of our own. FICOM Partners is our pro bono marketing firm.
Yeah, we love Market FICOM. Council. A big shout out to over them. Yeah. Market Council, we love them too.
Is our pro bono compliance firm. So there's a lot of people that are helping. This is by no means me. Our board of trustees is made up of 18 people from the industry, half advisors, half industry. So there is so many people behind this effort and thousands of volunteers. So I am a tiny little piece of the puzzle.
Okay, tiny piece of the puzzle, but I'm so glad.
Here? Yeah. So we've been talking a lot about how do we make pro bono more accessible. And one of the things that we really wanted to do was explore how technology can help not just the pro bono client, but the pro bono advisor who's working with them and the nonprofit that is helping us find these pro bono clients. And so we've been talking about this for a little while, and we have 3 phenomenal partners on the Foundation board: Orion, InvestNet, and eMoney. And so they're all partnering together, which is amazing. So if you're here at T3, we have a session tomorrow. But they're partnering together to figure this out. And we're working with a consultant, Hussein Zaidi, who many of you know, who actually created Advisor financial planning software. He has been working with us. We did a research project last summer where we interviewed pro bono clients, nonprofits, and financial advisors to find out what are the real issues that prevent you or make it harder for you to do pro bono financial planning. And we'll talk a lot about the results tomorrow, but it boils down to, at the beginning of the day, or at the end of the day, really, I guess, it's about how some of it's just administrative, right? How are we scheduling the appointments? How are we making sure that there's a flow of communication and that we collect the data that we need, financial things like that. Now, again, in a pro bono engagement, the client might not have built up trust with the advisor yet, so we don't want to rush things, but there's a technology solution that can help us get more information to the advisor quicker so that they can spend more time talking to the client and really helping figure out how they can help them with cash flow or budgeting, which are generally issues that are facing the pro bono clients that advisors use. So we're here to present the research findings. Hussein is moderating a panel with folks from all three of those firms, and we'll talk about what we've learned and how we are going to look forward and what kind of prototype we're building that we're hoping to launch with some pilot groups this summer to make that part of it easier. And then from there, we're going to continue to build. And we've had I can't thank Orion eMoney and InvestNet enough for the support that they've given, and just they're all so enthusiastic about it. And that we're all working together is just so cool. And that's where, when I think about the ecosystem, that's where it's so exciting to be at T3 and see that. And we want to raise the visibility. We'd love other partners to say, hey, you know what? I have a great solution. Maybe there's something I can help you with. And we're open to looking at other tech firms as well who may have solutions that can help us with this problem. Because then it's not a one and done, right? There's no size fits all, and we work with many different kinds of nonprofits that are at various stages of their own technology journey. So the more partners that we have, the better able we are to support all the partners that we work with.
So the results of this research study, so I imagine this is going to come out, this episode, after this conference, and that there'll be people listening who want their hands on the research study. So can you give us at least the website or a contact?
Yeah, definitely. So if you go to ffpprobono.org,
okay,
that's our website. We'll list the findings of the survey there.
That'll be great.
We'll talk about it. I'm sure we'll do some more social media about it, maybe some LinkedIn posts, because I do think it's important for everyone to understand who we talk to, what we've done. So after we present it, we'll make sure that we get that out on the website, and folks can kind of see themselves maybe in some of those research findings and see that we're looking at solutions to help them if they said, oh, I want to do pro bono, but it's hard because sometimes the client cancels. Sometimes the client has a job where they're at the whim of their supervisor. And the supervisor says, you're working a double shift. They don't have time to reach out to the advisor because right now it may have to go through the nonprofit, and then it becomes a scheduling nightmare. So how can we make that easier for someone who is just trying to help themselves, help their family out of a better situation? Let's create as many pipes as we can to make it easier for everybody to get involved. So yeah, we'll certainly share that.
That's great. Kate, I think it's incredible how everybody's coming together for the sake of just bringing more financial planning, putting it in the hands of lots of people, and using technology and partnerships to augment that experience. So congratulations on the work that you're doing. We'll continue to follow it. We'll put links, everyone, and I urge you to check out the Foundation for Financial Planning, the incredible work that we're going to be doing. We'll put the social link as well. So thank you, Kate Healy, so much for being in the suite today. It's always great to see you.
Thanks for having me in the suite, Tina, and thanks for always raising the visibility of what the Foundation is doing. I really, really appreciate it.
The lack of financial literacy is an economic and public health crisis because being financially literate is essential to improving America's standard of living and reducing income inequality. That's where Financial Fitness Group comes in. They're helping empower people by making learning about finances easy, effective, and fun. FFG is the leading provider of unbiased financial education to banks, credit unions, advisors, government agencies, and employers across the nation. Visit financialfitnessgroup.com today to learn more. Wow, Mac Bartine, take a seat in the suite. It's awesome to see you here.
Thanks, Tina. Great to see you.
Technology Tools for Today conference, and I'm seeing your face. How are you doing today?
Doing great. Yeah.
Good. So interesting, because I saw you come up in my feed today, and you are the CEO of Smartria, and congratulations on being named I think it was a Global Tech 100, Well Tech 100.
Yes. Yeah. Thank you.
Yeah, that's fantastic. Good stuff. So what do you think of the conference so far?
It's been great. T3 is a great conference for getting to see so many of the technology solutions in our industry together in one place. And there's some great people from the wealth management industry as well. But just getting to see so many of the people who we interact with, integrations for Smartria, and just talking with them about what's happening in the industry is great.
Yeah, and one of the reasons for this podcast, and we did a nice roundup post from Market Council. I tried to grab you then back in December, and we're doing these roundup posts to make sure that the people, the advisors who can't get here, the enterprise leaders who can't get here, we're bringing back the stories and the news of the day for them too. So wanted to know your thoughts on where compliance is headed, because there are a lot of people listening right now. They might not know who Smartria is, so I would love for you to share who Smartria is and what you do.
Sure. So Smartria is a software as a service company. We manage compliance for wealth managers, and we're working with firms from 2 or 3 people shops all the way up to firms with hundreds of professionals. And the largest group of people working together in our software is over 1,000 professionals. So we have the ability to be a scalable and very customizable platform. And we believe that we are the best company in the industry at making a scalable, customizable platform that can fit any firm, regardless of what their business model is in the RIA space. We have a solution that's built for them.
Yeah, the way that I see your platform is, in my view, it's almost like a turnkey asset management platform in compliance. You've got all the forms there, you've got all the activities there, and I drooled when I first saw the product because I went through an SEC exam in January of 2010. And luckily at the time that we had a CRM, we had Juncture, so that provided a lot of the business automation that we needed to export communications. And then when I took a look at your product, I said, oh wow, if I had already had this before the SEC came in, I would have had a lot more sleep during that time.
Yes, it really is built for exam preparation and readiness, and several multi-billion-dollar RIAs that are using our platform have told us things like the last SEC exam we had before using Smartria took days, maybe weeks of preparation for specific questions they were asked. And the first exam they had with us, after having put their information into our platform, it took minutes. It really is designed to pull all of that information together and automate it for exam time.
And the other thing that I understand about Smartria too is that there are different roles, right? There are different permission sets, and the responsibilities and roles for people working at your firm are different. So certainly your chief compliance officer is going to look, is going to be different than the client service person or like office personnel. Mm-hmm. So your platform has the ability to discern and put different tasks for each by role, right?
Absolutely. And not only by role, but by group within an organization. So the larger organizations, the more complex RIAs have multiple different business groups doing different business models, and they have different compliance obligations. And our system is really built for that.
So what I also find that's so interesting about the space, Mac, and that is the coolest people are here. And so people that are involved in like you, involved in compliance, but yet you've got this awesome other side of you. So you're a musician, you're an artist, and I think that it's funny, before I came to this industry, I made the assumptions. I had an idea what people in financial services were like,
right.
And you are just a fascinating individual.
Oh, that's kind of you to say. Having passions that keep you going, it's something that all of us need, and I love artistic endeavors of all kinds, and seeing and participating in that. And really, to me, technology entrepreneurship is a creative endeavor. How can we best solve the problems that our customers have? And it's a creative process getting to the right answer.
I think that nobody's ever explained it in that way. And again, a lot of business leaders are here. I'm asking the question too in the suite about what business leaders such as yourselves, CEOs of leading fintech firms, see in the future, because a lot of us have have started to integrate the right tech stack, but part of coming here to the T3 conference is preparing for the future. So what would you say to those? I'll give you the question in two parts, Mac, and that is, first we have the smaller advisor, the smaller shop, maybe like it's less than 15 people. What would you say about how that advisor should be preparing for the future in terms of compliance? And then I would like to reflect it back on you with the enterprise.
The thing is, as different as those two organizations are, the answer is really similar, but for different reasons. So for the smaller firm, they don't have the resources to be able to hire a compliance team or to pay outside compliance professionals for enough hours to be able to get everything done and be confident that everything is right. And they really need compliance automation for that, so that they can be confident that they've done everything correctly and they're prepared. And on the opposite side of things, the enterprise organizations, they're growing through the normal methods. Of course, they're getting referrals for new advisors and for new clients, but they are also acquiring new books of business from acquiring entire firms. And those firms have different processes than they do when they come in. And as M&A continues in our industry, and obviously it's going to, we're in a major consolidation shift. And those firms have to have a central repository that's integrated with the most popular options for everything that they're pulling in, CRMs and billing and performance. And so even though they're using different systems, even if they're going to move those companies into the system of their choice, they still have to be collecting information during the period while they're transitioning. And so they also need a system that really is pulling everything together and giving them the flexibility to track their business models, different compliance obligations within the same platform. And from a future point of view, data analysis is going to become more and more important, machine learning, et cetera. We just aren't anywhere close to the point where artificial intelligence is going to be replacing the traditional business model of compliance professionals solving problems. We're nowhere near that, but machine learning can make a difference. And I do think that data analysis and machine learning is going to become more and more important.
Yeah, I couldn't agree more. I think it's interesting that you brought up the term M&A, because we were acquired by a much larger firm that was Mercer Advisors out of Denver, Colorado. And I would say that from an acquisition perspective, we were more attractive to different buyers because we had a code of compliance, a compliance culture. And so it might not have been the best automated system at the time, but we were a much more attractive candidate because we did all of those compliance methodologies and we could demonstrate that. So I would say too, from a firm, nobody's really talking about how we need to have this compliance culture that you talk about, even to prepare ourselves for merger and acquisitions. There are a lot of advisors here who will sell their firm. That consolidation that you talk about is very real. And I see that with a bunch of companies here. We just had a client actually just announced to us that they were being acquired. It just totally came out of left field. So I think compliance doesn't have to be boring, doesn't have to be dry. You guys have live demos and I see you on stages and giving talks. I know that we've got a bunch of conferences coming up.
Absolutely. There's a lot to be excited about in our industry, and there's a lot to be excited about at SmartRIA. we're a young company, but I really believe that we have the best solution in the industry, and we love being nose to the grindstone, continuously working to be even better.
Well, I know that there's people here who are listening to this episode and want to get more information from SmartRIA. So what's the best way to get in touch?
Just visit us at SmartRIA.com.
Okay,
That's
great.
it.
Fantastic. Mac, thank you so much for making the time. I really appreciate
It's my pleasure.
breaking away from the conference to do so, to get a few minutes here in the suite.
Absolutely.
So congratulations on all your success. We'll see you soon.
Thanks.
Wow, Rich Cancro, take a seat in the suite. I can't believe this. We are sitting here in T3 in the exhibit hall, and I'm at the coolest booth. I don't even call it a booth. I feel like we've been transported. For those of you who can't see right now, I'm under a pergola that's made of wood, and we're here. I've never seen a booth like this ever, Rich. It totally blows my mind. And these leather chase lounge chairs that are a gorgeous, either a chestnut or a bamboo. This is unbelievable. How are you today?
Tina, I'm doing great. We're sitting here. I feel like we're relaxing in the lounge right now, having a good conversation with a lot of fun people here at T3. The excitement at T3, it's so much fun to be back and meet people in person. And this is clearly the biggest T3 I've ever been to, and I've been going since 2012. All sorts of people around the industry are here. It's great to catch up in person and not in video. And we're just, this is our kind of a rebrand coming out of a rebrand. Yeah. We completely transformed our brand identity. Craig Ramsey and his team has done, honestly, an amazing job. There's so many people stopped by and said, wow.
Yeah.
And our brand identity is really trying to match our overall ethos of personal, scientific, and beautiful. Which I'd love for people to take a look at our CRM, which was formerly known as Juncture. We branded it, replatformed it. It looks beautiful. There's a lot of science in it, and you can personalize it both for the advisor and for your client service.
Well, I have to say that I really took notice, so I keep on saying it. I sound like a broken record on this podcast. I apologize to all of you listening, but I came from a traditional wealth management background before I started the agency, and that was that we were power users of Juncture, and so I'm so glad. It's so exciting to see how the product has evolved and how you've reimagined it under, given it a different UI, given it a different UX. And I think that CRM is the most important component to advisors' business. It still floors me, Rich, that some practices are scratching their heads because it's no longer that CRM is used for just what I'll say data mining or data depositing, is that now you're getting real insights from that data, and it's allowing you to make better decisions in business.
Yeah, no, that's a great observation. CRM is over the past, I'd say 20 years, has gone through a significant growth, which I think really benefits advisors and their client. But it used to be a glorified contact index. If you go back 20 plus years ago,
yeah.
And then we had some workflows in and some integrations. But really, what the CRM is now, it's the heartbeat of an advisor's office, right? In terms of really being able to go deep. And we actually were talking to one of our clients to give you an example. In our system, they create workflows. There's so much customization that you can do to really down to the client level, to the client segmentation level, to the business operations person, to the advisor, how they want to manage their businesses individually and at the group level. The amount of customization is amazing, and to really help advisors serve their clients.
Yeah, because then it's a repeatable process. So we utilized the workflows way back when, and that was really easy. So when we were trying to cross-train other team members, right, because eventually people do go on vacation and have to have a life, it made it a lot easier. I think you set up your team for success because then they know exactly what's expected, how to do their jobs really well. Nobody wants to come to a new position and fail miserably. A workflow allows that repeatable process and gives people confidence to, hey, walk into a new position, walk into a new firm and get it right from the get.
Yeah, no, for sure. One of the things I talked about on stage and had a lot of fun, a little nervous, quite frankly, before. I haven't spoken on stage in over 2 years.
You wouldn't have known, though. I got to tell you, you opened up the conference with a bang.
I'll be honest. I was a little nervous about 45 minutes beforehand, but I got reset, seeing friendly faces. But I think one of the key things here is that when you can drive, you talked about repeatable. One of the things we talked about is consistency. So even if you're personalizing it down to the client level or at this client segmentation level, you want to drive consistency so you can scale your business and ensure that you're delivering the service level that you have promised your client.
Right, exactly. The other thing I want to talk about, it's this idea of being bold, right? And I've been talking and preaching this for years and years here in the industry. Why is it that some companies can act bold, and why is it that some companies are still held hostage to like old ways of thinking? You come out here and you totally disrupt the brand and give it just a whole new identity. What makes you as a business leader able to take on that type of risk? Where do other advisors, business leaders, people listening to this, because they're being held back by their old ways of thinking, and if they would just get out of their heads and do something as creative and as visionary as this, they could move a lot faster.
Yeah, well, I think there's a couple of key things. One, you have to be transparent with yourself and with your team. All right, so if you look at some of our signage here, we are very transparent about, hey, there were some UX challenges on the former Juncture, now Advisor and Instagram. We reinvented the whole thing. So I think being really transparent with yourself, honest with yourself. And then that can drive you to be bold, right? But it's also having a long-term plan. Where do you want to go? Because what you don't want to do is kind of change every few months where you're going. You can always change your priorities, but you should always be consistent on your vision and your strategy. And so we took the long term, and we spent 4 years to get here. And we did a lot of work underneath on the infrastructure, the architecture, that set up the framework so now we can deliver an amazing experience. But that was a long-term view. That's a 4-year view to get there. But we stay consistent on where we were going. Priorities always change, but we stay consistent of where we're going. And it's the same thing, like we have another 3 years of where we're going next. And you have to go back to consistency. You have to be consistent on your vision.
Yeah. So where are you going? I know that you came out with a recent research report. It's 19 pages long with, of course, your parent, Franklin Templeton, institutional investor. Where do you see right now the future headed? Where's Advisor Engine headed, and where should advisors be headed?
Yeah, for sure. So I can probably speak for 2 hours on that question. I'll try to do it in like 1 minute. So first of all, I think it's about data and experiences, and you got to connect. So one of the things we talked about all week here is connection, and that means with your advisors, with your clients, with your business operations. They all need to be connected. And we talked about productivity, and we talked about growth. And when we start thinking about true productivity, true growth, and when we talk about productivity, that means same set of resources that you can do more with that, right? But all these things need to be connected to be able to do that. So when we think about connecting with your client, connecting your advisor, you're creating personalization. And doing that, when we talk about personalization at scale, then you have to have a platform mindset to actually activate that. So think of a world where, hey, like a prospect is on my website, they fill in a form, so I just ran a really cool marketing campaign, so I'm getting eyeballs come to my website. Now you're getting that data and have that flow all the way through into the CRM. Have it automatically build out, here's my opportunities, and have that data. You don't have to re-enter it. And then that goes, if they become a client of yours, all that data naturally goes into the custodian, the account's open. So now you have connections, you drove a great marketing campaign, you have a great intake form, a web form, and then all that data flows through. That's productivity. And then what that does is that frees up your time, your entire staff's time, so they can spend more time on building relationships, building new relationships. And then also, because you're more productive, as you're growing, you can put capital instead of into more tech and more operations, you can put it into marketing. So we talked a lot about that we think of technology and we think of marketing as growth drivers.
I want to praise you. I want to just say hallelujah to that. You are the first business leader that I've really heard being so bullish on marketing here and trying to get advisors to, again, move off the dime. And part of your research also too lend itself that you create this seamless client experience and this digital presence. And I loved how you talked about it, that digital is a means for growth.
Yeah, there's a few components to it. One is advisors are great at referrals. They're great at it. They're great at building relationships, great in their communities. But we think they really can maintain growth and extend growth. Like if you look at the Schwab study, advisors who do marketing beyond referral programs are growing twice as fast. And that means if you think of someone's really good at referrals, they may not be good at marketing. So maybe things you don't know. So finding the right resource, the right people to help you, whether they're employees or they're consultants. So you start thinking about SEO. You start thinking about Google Ads. You start thinking about, integrating, like let's say with a HubSpot and having a whole marketing program. But then the second part is you're getting people to your website how's your online presence? Because what we're finding, the research that we did, is effectively about 2/3 of the people, whether refer to you or they come to your website, don't actually contact you because they didn't connect with you. Whether it's your social media, whether it's your profile, whether it's what websites you're actually associated with. So there's a lot of interesting things there that if you really focus on your presence, focus on a marketing program, that will lead to results.
Well, so how do advisors listening get in touch with the Advisor Engine? I know that you're here at T3 and this will go live after T3, but you're always doing like webinars, and we just met with Kathy Crowley over there. You're really approachable brand and trying to get advisors now to see the product and to do demos and see how all of this works in action, because it's hard for especially like a visual learner to understand it. Once you see it, you get it.
Yeah, I know. To get in touch with us for advisorengine.com. Feel free to go there, but you can also send me an email, richard@advisorengine.com. You can send to George Tamer, David Coyle, Kathy Crowley. They're amazing people, and they'd certainly be more than happy to help what things you're trying to solve for and whether we have a good fit with you. My cell phone's on my email. So.
Oh, I love that. Rich Cancro, truly an honor. Thank you so much for making time today here at T3. Wow, John Makowiak, take a seat in the suite. It is so great to see you here at T3. It's an enormous pleasure to be here in person, right? I think the last time that I saw you here was about 2.5 years ago when we were all here. How does it feel to you to be back?
I'm thrilled to be back.
Yeah.
I got real tired of the video calls that seemingly never ended and not being able to travel and see people. And it's just great to see everyone again. And the energy is, for those of you who couldn't be here, the energy is awesome. It's great to be back in person.
Well, that's why we invited you here in the suite. We know that you're doing some great things and definitely wanted to talk about some of the major announcements that are happening even to a little bit before T3 and bring you here in the suite. So this idea of, first of all, let me introduce you to everyone. And you are Chief Business Development Officer for Advison. So could you let everybody know who Advison is?
Yeah, that's a very lengthy title, but I do a lot. So I head up sales and marketing and service and wherever else I'm needed. I shipped all our stuff for this event here late last week, so do a lot, but Advison also does a lot. So at our core, we're a reporting and billing solution, and we're a little over 8 years since launching. And when we launched, reporting had been done, whether legacy systems or current generation systems that had been done. So how are we going to differentiate? Answer to that was really to include most, if not all, of the other tools that an advisory firm needs to run its business. So CRM, full document management system. It is SEC compliant now. We have a white label client portal and mobile app. A couple years ago, we added tools kind of getting beyond maintaining your business, but helping our users grow their business. So it's been really well received with our Fact Finder, our prospect portal, digital account opening tools. That all kind of ties together into our growth suite. And then just a couple weeks ago, we launched Advison Quantum, our long-awaited rebalancing tool that we've been hard at work on for the last couple of years.
So I couldn't help but see the quantum, and if you could tell us a little bit about what that means and how that starts to bridge the quantum physics. Is there something in there that's quantum-like?
What is the tie-in? So Hyland Lee, our founder and CEO, he's floating around here somewhere. He actually has a PhD in physics. And so we tied that together, and he has a CFA and also an MBA from Northwestern for fun. But the physics was really what we wanted to tie together there with the name quantum.
It's interesting to see how the landscape has evolved in the last 2 years. And I'm curious to know whether or not that you think the pandemic had an effect on an advisor's practice to now be willing to take chances and be willing to try new tools and new approaches to how they run their business. What are you seeing?
I think to an extent, yes. I think the bigger trend that we've seen even pre-pandemic was we would get challenged, especially in the early days, a lot. Jack of all trades, master of none. And it was really just showing people at that point. And there were some people absolutely not. And there are still some that say, I just want your reporting. I'm not going to do CRM. I'm fine with my current provider. And I said, okay, well, let me just show you a couple things here. And then more often than not, 6 months later, they're calling us to migrate their CRM stuff. So I think the market has really shifted. When we started, it was all about integration. And everybody has to talk to everybody, and that's too complicated of a puzzle, and most firms don't really need all that. And integration was great when it started, but now there's just a lot of like check the box bare minimum type integrations, and our approach there is really, if we're going to integrate with somebody, let's make it great and really add value versus just a quick data pass. So the market overall has kind of shifted away from the basic integrations. They're better now, but it's also the willingness to procure more services from less vendors. And we've obviously done well with that. I think we had a hand in shifting it, certainly not by ourselves, but our success has helped with that. But you've seen plenty of M&A over the last few years trying to get to a more comprehensive solution, and that's really what we've built out of the box.
Yeah, I mean we're seeing M&A in the fintech space as well. And I think that you are absolutely correct in your views that there has been a migration now for advisors to adapt technology, but through less providers because it's less complicated for them. And I think that technology providers such as Advison, that the ability to see where an advisor's practice was going and be able to augment around that really helps to build their practice, which is what technology is for, right?
Well, and think about it this way, and Quantum is a great example. People know how to use Quantum on day one.
Wow.
We need to train you on the features and
right.
where to click to do what, but intuitively they knew what they were doing with it. And so any feature we add in the future, we can take that same approach because it's the same user interface. A rebalance can be initiated right from a client record. You don't have to go into Quantum to do that. And so you're almost pre-trained on the software simply because you use it for other purposes. And I think that is just a huge advantage. And that doesn't even get into all the efficiency and the one-stop shop that we have, that a client calls you out of the blue. It's a great example. What do? You go to your CRM first, and then they have a question about their account.
And then let
me go log in.
Right.
And with Advison, you enter a couple letters, pull up their client dashboard. You've got all their CRM data, and it's right next to performance history, for example.
Yeah. See, I come from a traditional wealth management background, and the experience that you're talking about, we literally had to cobble it together. There was no solution then at the time that was this all-in-one encompassing. And so, we used a separate rebalancer, separate portfolio management tool, separate risk platform. Like everything was this kind of fragmented experience for the wealth advisor. That's no longer the case anymore.
What did you do when you hired a new employee?
Oh gosh, it was painful. So that new employee had to learn different systems at different times, and until you really mastered the learning curve of one system, we always started with the CRM. So that was the CRM was the Bible in the firm, and that you knew the idea to really know your client and really understand your client, and everyone connected to your client, right? Their children, the people who were important to them, even interested parties who had copies of their reports and understanding what their family life and what their goals were. So it's wonderful to see this evolution. I will say this also too, Bob Veris's and Joel Bruckenstein's T3 technology survey came out too, which has been positive for Advison and starting to now show the pathway of where the advisor wants to go.
Yeah, we're thrilled with the results. This is 5 years in a row. We've been so highly rated. I'd like to thank all of our clients who are listening. They make that happen for us. But the all-in-one category that I wasn't at the presentation, but apparently that used to be kind of a bit of a laughing matter, the all-in-one. Apparently they're embracing it a little bit more, which is cool to see. But seeing Advison ranked highly in both CRM, we're near the top of the list there. I think we were second, if I remember correctly. And then we were right up there on performance reporting as well. And we're beating out some much bigger names when it comes to how happy our clients are. And a big piece of that is because we listen to them, and we're really pushing things forward very aggressively with development. So 5, 6, 7 times a year we have releases that are just chock full of features. So it's like Christmas for me.
I love it
when these things come out.
Well, so we'll make sure that we have a link in the show notes for the T3 Technology Survey. We on the marketing side also too utilize it. We like to see what's happening in the industry too, because marketing strategy and positioning, and it's just great to see how advisors are now really starting to not only discover the tech, but to get involved in the tech. So what's the best way for people to get in touch with you and learn more about Advison?
Yeah, visit our website, advison.com. There's a demo link on there. We do all these one-on-one. I think that does play a role in how we've been able to get these client satisfaction ratings as high as we have, because we're consulting. We're not selling. I was in the sales role for many years, and it's like Advison is only part of the presentation. Oftentimes we're talking about things like email and calendar hosting. Where can you go to get a website done? So we're kind of helping with the whole picture, and Advison is hopefully a big piece of that picture for a lot of these folks. But the demo link will set you up with one of our great salespeople to run through that process.
Great. Well, congratulations on your impressive news. I look forward to staying connected, and much success to you, John. Thanks, you Tina, for your time here in the suite. Wow, Patrick Reed, take a seat in the suite. It is so great to see you here at T3. What a surprise, actually. I turned the corner and you were there. Really great to see you here at T3. I wanted to make sure that the world knew the exciting work that Your Stake is doing. And so welcome. Is this your first T3?
Thank you. It's actually my second. My first was third week of February 2020. In San Diego, California, where I got back to my home afterwards sick. And so
wow.
There's a degree of speculation that could go on, but I actually, in reconnecting with some people here, other people shared the same experience. So maybe we brought COVID to the United States, who knows?
We're seeing an incredible turnout here at T3. And the reason why advisors and enterprises alike come to T3, and that is because they want to act bold and differently in the future. And they're looking to get their hands on the latest tech. And so Your Stake has such an interesting, I think you occupy a place in the market that no other firm here, and I know you're not here as an exhibitor today, but Your Stake has made quite a bunch of noise in wealthmanagement.com. Of course, your co-founder. So Gabe Rissman, who you have your podcast, you have a website, you've got all kinds of things going on. And we saw Michael Kitts is here yesterday, who talked about you because you're also plugged into XYPN. So for those people who don't know what Your Stake is, I want to give like a little bit of a drum roll here. And then I would love for you to introduce Your Stake to the world.
Sure. So Your Stake, it's about you. It's about what are your values, your social values, environmental values, faith-based values, and we provide a way to look at your portfolio through that personalized lens, whether it's looking at a report of if you've invested in a portfolio, how many more meetings led by women compared to the benchmark, how many fewer asthma attacks, how many more chickens saved, or if you are looking to do some analysis for choosing investments, research, and direct indexing as well to build customized portfolios. So we have a wide range of different practices that can leverage it, from shops that really have a couple of portfolios that they like to demonstrate the impact to their clients, even mutual fund portfolios, to advisors that are doing their own diligence on investments and a little bit of portfolio management, all the way up to home offices that are looking at creating separately managed accounts and other types of customized products.
Yeah, so we've started to see more requests for ESG, SRI, environmental, social governance. I think the practice for an advisor is starting to change in that an advisor's population, they really care about where they're putting their money, and that the decisions that they're making around the money have to align with who they are as people. I think that's a key differentiator for an advisor to build their practice around that.
Yeah, we found that a lot of advisors that come to us have started trying some ESG solutions in the past, and maybe there was like a score of 4 out of 5 or 8.2 out of 10, and then they're in the position of saying to a client, hey, don't you like my portfolio? Isn't it great? Whereas what we find really unlocks a much more trusting relationship is putting the power in the client's hands and saying, what's important to you? Take this behavioral questionnaire to discern your values, and then we'll report on and show you how your portfolios are related to the things that you care about, as opposed to just what our analyst team thinks.
And the way that you've approached these conversations is empowering and different to a practice. So you've got a technology solution behind it, so that the questionnaire leads you through. And I took the questionnaire and I was really fascinated. Again, I keep on saying this over and over today, but I come from a traditional wealth management background that didn't have access to these tools. And the way that an advisor made an allocation to an ESG was in the form of one fund and one fund only. And there, wow, we checked the box. But I see that an advisor can really start to differentiate through having the technology, but you're also helping advisors to have a different type of conversation. Yeah. Will you kind of talk about that? How is the conversation around ESG in a your stake ecosystem different than a regular ESG conversation?
Yeah, absolutely. The conversation is really where we focus, and where we've grown is really based off of feedback from advisors. In a sense, you can think about it like a risk conversation, in a sense where everyone has statistics about risk, but how do you have a behavioral way of navigating a specific conversation with the client? We really take a lot of attention to what are the ways we can support advisors in being confident in that values conversation, which some advisors are and compliance officers are timid about, because you don't want to be offending clients or making assumptions about what their beliefs are. So we have a really honed way of that onboarding kind of intake process navigation. And then when you're reporting on a portfolio, the last thing any advisor wants to have happen, and we see this time and time again with general ESG approaches where there's that rating or the score, is the client asks, what does it mean? And then there's kind of a moment of just staring blankly, or trying to pull up a huge 100-page methodology and starting to explain econometrics to your client. So the real neat part about what we've been able to help our advisory clients with is the reports that we present are actually interactive. It's not just, you can print it out on a page, but you can click into any single piece of information that you see, and then you can see not just more detail, but contextual detail that you can explain to your client. Like, what's the topic about? What's the history of this issue? Where's this data coming from as a source? How is it being calculated? And it's something that most clients won't want to go through every detail of every piece of information about their portfolio, but even going through a couple of times builds trust, which is really what the whole advisory client experience is about. It's about building trust with your clients and being able to demonstrate that what you are saying you're doing is what you're doing.
And one last thing before we let you go, I think it's really fascinating. You just talked about econometrics, and you could actually explain that. So you and your co-founder, Gabe Rissman, have an interesting origin story. And where did you meet?
So we were students. We were also student environmental activists at our campus, which was Yale University. And that's how we got into the whole interest in responsible investing, is understanding what actually can create impact. We did academic research, and I think maybe where you're going with it, everyone likes to say, so my co-founder studied computational astrophysics, which sounds more impressive than what I studied, which was econometrics. But I did climate modeling and
I'm still impressed, Patrick.
Yeah. My thesis advisor was, after I graduated, got the Nobel. So
really fascinating work. We're going to put a link into the show notes. I know that you have a YouTube channel, you've got a podcast. I just applaud your work for setting up a public benefit corporation and then being in this space and allowing the advisors here to manage the future of their clients in a way that we haven't seen before. So congratulations.
Thank you. Yeah, the reason we're doing all of this is really impact. We're a public benefit corporation, which is not just a B Corp where you're a good place to work, but it's actually in our charter that we are advancing a social cause. And the reason we're so excited to help advisors is there's a huge gap of the people that are interested. 85% of investors want to have impact with their investments, and about 10% of them do. And we see advisory as a really high leverage way to help more people have impact, and which ultimately helps the world.
Hey listeners, if you're looking for actionable advice and motivation to get you through your day, follow In the Suite on Instagram. This week we shared 24 things you could do today to improve your career. I encourage you to check out that post. It's awesome. It's lots of information there that I think that you'll find useful. So you can find it again on Instagram at In the Suite Pod. That's all one word, In the Suite Pod. And we'll see you over there on Instagram. Wow, Akshay Singh, take a seat in the suite. It is so fantastic to see you, CEO and founder of InvestmentNews. Akshay, it has been 2 years.
It has been 2 years.
Right?
I miss this energy, on social media. I know that that's the person, but it's great to see you live after a couple of years.
Yeah.
San Diego, I remember.
Yeah. It's wonderful to see you now. And so I've been so impressed with InvestmentNews's growth. And I wanted to just catch up with you, find out what is going on. Also, too, for advisors that aren't aware of what InvestmentNews does, I would love for you to just give us a quick primer on who InvestmentNews is and how you serve the investment community.
Absolutely. So InvestmentNews is an investor experience platform. What that means is we help advisors gather feedback from their clients and help them grow their practice by bringing them referrals, online and third-party referrals from us. So think of us as a referral network that is enabling advisors improve the experience of investors online.
That's really interesting. And so you're using a lot of technology behind the product to make sure that the recommendations for the advisor really fit that profile. Can you go a little deeper on what that, either it's behavioral targeting or interest, and how you're looking at the data to make sure that those increase the probability of referrals, I guess?
Absolutely. Let's first start with behind the scenes. The first thing we help advisors is collect feedback from their own clients. It's amazing. Advisors are reluctant to collect feedback because they wonder, what are my clients going to say about me? But within 72 hours, 25 to 40% of clients of advisors are giving them feedback reviews, which is a great opportunity for advisors to learn in a data-driven manner how they're serving their clients. And that really helps them identify, oh, wow, my clients value that I communicate with them on hard concepts and make them understandable. So they understand their value proposition. So that's the first piece where the data comes in. Advisors get a data-driven feedback for their practice. The second step is then we create these data-driven profiles for the advisor. These data-driven profiles are verified by us, and they're powered by the data that the clients decided to give feedback to the advisor on. And then step 3 is our matchmaking algorithms take into account what a consumer is looking for, what are the specializations of the advisor, along with what clients of this advisor are saying about this advisor, to create that perfect match when someone is looking for an advisor online.
And so when you are initializing that first feedback, is that a survey that comes through the client? Kind of talk a little bit about that data collection process, if you would. I'm really curious about it.
Yeah, absolutely. So the first feedback is a survey which has been designed specially for this purpose. The advisor gives their clients a heads up that I'll be sending out this feedback survey. Please share your feedback, because I want to learn and grow from that. So the surveys are all done for the advisor through our platform. They're able to launch these surveys, and we will be announcing some integrations very soon to make the advisor's life really simple to collect this feedback. And the clients get the feedback, and like I said, within 72 hours, we've seen 25 to 40% of clients engage and respond and give advisors that feedback that they should have been collecting all along.
Yeah, that's really interesting. And so now once you have the data set from that feedback, you're using it, then they're using it to prospect new clients. Can you connect the points from point A to point B? Does that mean that it's going into some sort of advertising platform? That's the part where I'd love to find out how you're doing it.
Sure. So step one, they collect feedback from their clients. It's all sitting in the platform. It can all stay private, and they don't have to share that on an ad platform or anywhere for that matter. Just take the feedback, grow your practice. But step two is advisors can choose to publish this feedback on their profiles, which are created on InvestmentNews platform. So as an advisor, I can choose to say, I want my feedback to be published publicly, which means that the comments that the clients gave the advisor, obviously with no personally identifiable information, all of that is scrubbed off. They're not supposed to and they're not allowed to, but we take that all out, gets published on the advisor's profile. So now I'm an advisor, let's say Akshay, and I have feedback from my clients, and that's all published on the advisor's profile as verified client feedback for the advisor. No names are used. Again, all of that information is scrubbed out. And this advisor's profile is now available for matching with similar clients or similar prospects. So as an example, if an advisor has a bunch of clients who are doctors, when they're leaving feedback for the advisor, they will identify that the advisor gave me great insights on how to run my practice as a doctor. Guess what? When we are trying to match some doctors with an advisor, the term doctors is going to come up. And that's kind of what will create that match and make this advisor available for that match with doctors who are looking for financial advisors. Does that clarify a little bit more?
Yeah, it does. And I'm also curious how you drive then. So part of this is that advisors reaching out from a B2C perspective, right? Getting that end consumer. So how are end consumers being directed to InvestmentNews platform?
So that is what a little bit of the secret sauce is.
Okay. It was the question. It was the magical question.
But if you think about it, how do platforms like Yelp get people coming to their platform?
Right. Yeah.
Right? Why does an Uber start to get people downloading their app? And really, at the end of the day, what's powering all of that stuff is we are the first platform, to what I understand, that is bringing this kind of transparency in the industry, which is driving a lot of value for the consumers who can now trust us. Because think about this way, Tina. Have you stayed in an Airbnb?
Yes, I have.
And how crazy is it? You're staying in a stranger's home.
Absolutely.
How are you trusting? That this place is going to be all right?
Like you said, the reviews. I'm taking other people's word
exactly.
for it.
And
right.
you know that these are not fake reviews. These are actual people who stayed in Airbnb.
Right.
Not like Google that anybody can come and leave a review, right?
Yeah.
So that's what we are doing. We are bringing transparency through verified clients, and we're creating that trust and confidence. And that'll drive a lot of value both for the consumer and the advisor.
Very interesting. Okay, so then how do advisors get to take advantage of the technology that you've built?
Absolutely. So you can't miss it if you come to indiefin.com for advisors. Just click there and it'll be very easy for you to get started with the process and get onboarded.
Okay. Well, fantastic. Congratulations to you again. How great to see you after 2.5 years. And I applaud what you're doing in the industry. Part of what we're doing today here in this suite is just talking about groundbreaking platforms, reimagining the industry in a totally different way, which is what T3 is all about. So Akshay, great to see you. Good luck to you.
Great to see you, Tina. And thank you for bringing all the energy. And it's always delightful to see you. And hopefully you'll be partying tonight with the rest of us.
Thank you. I'm honored. Can't wait for tonight. So Nitin Seth take a seat in the suite. It is so I'm incredibly honored to welcome you here today. It's our first conversation together. And what a highlight that I'm sitting here at T3 with this incredible book, Winning in the Digital Age. You're CEO of Incedo. And I just can't thank you enough for making the time. I know you're very busy and you've had a lots of news. So let's get started. You have a very interesting origin story of the name of the company, Incedo. So if you could just give us a little bit of background, what the name means and what you do.
Yeah, Incedo is actually a Latin name, and it's Latin for drive forward. So I'm very passionate about sports. So that's where a little bit where this name comes from. It kind of it represents like this irresistible force. Always marching forward.
That's right. What a fantastic name. Being with that, I'm sitting here, for those of you who can't see, this is an incredible manuscript. I'm writing a book right now as well. And I'm sitting here with a book that is quite...
550 pages.
550 pages. You're CEO of a company that's doing incredible work in the AI and the technology and the fintech space. So why don't you give us a little bit of highlights? And I would love it for you to also sign an autographed copy for me.
I'd love to do
and
that,
I would be honored. What's the genesis of the book?
It's my career over the last 25 years, initially with McKinsey and Company, and then with Fidelity Investments, where I was the CEO for India, but also headed strategy and transformation for all of Fidelity's international business. And then I joined Flipkart, which is India's largest e-commerce company. And over the last 25 years, I've had the great opportunity of seeing the evolution of the digital age. We are in the digital age. It is hugely transforming every aspect of our life, and therefore every business out there. And I've seen that how this is such a great opportunity of creating new businesses, but equally it is challenging many existing industries, many companies. So everybody's spending a lot of money on digital. So annually there is like hundreds of billions of dollars, actually trillions of dollars being spent on digital. And that's very exciting. Yeah, but there is a part of the story which not many people talk about, that 70% of digital initiatives fail or don't achieve their desired results. So look at the maths. Over every year for the next 3 years, $2.5 trillion are going to be spent on digital. So next 3 years, over $7 trillion, and 70% will go waste.
Right,
so $5 trillion are going to go waste. Yeah, and that really, Tina, has been the trigger, the genesis for me to write this book, that hey, what is really happening, and what do corporations and what do leaders need to do differently so that the hitting rate, the winning percentage on digital is much better than the 30% that it is today.
And I know that you had a session here, and again, what brings business leaders to T3, we have hybrid REAs, we have REAs, we have small REAs, we have business leaders who want to now take that path forward that you talk about. What was your message to the participants in the audience?
See, there were two key messages I had, Tina. The first was, really to bring home the magnitude of change they need to go through. To kind of raise the alarm a bit. So, I've been in the wealth management industry for quite some time, given my career at Fidelity and given the work Incedo does. Wealth management is one of the biggest areas that we work in. So I have a lot of feeling, I have a lot of attachment to this industry. But I can say that, this industry is a laggard, as far as digital goes. This is a very successful industry. Generally, the participants you talked about make a lot of money, but as far as digital goes, they are behind. Yeah? And it worked because the industry so far has been very relationship driven. Most of the wealth is with people who are more than 65 years old or even 70 years old. They were very relationship driven. The last 10-15 years, markets have been great, so all was good. But we are going to see a very big shift, a generational shift of wealth to a younger population. As that happens, their behaviors are going to be very, very different. Yeah.
Oh, absolutely.
On top of that, the markets are turning. Yeah. So the combination of these factors means that hey, the scenario for wealth management industry going forward is going to be tougher. Yeah, it's going to be tougher. I think it's going to be way tougher.
Yeah.
Yeah. And digital is not just a nice to do thing. It's kind of one of those things which historically has been, it's very important, but not urgent. And therefore, while I talk about it, I don't really do much about it. So that's not the case now. You have to do it.
Yeah.
And to do it, you need to have a fundamentally different approach. Yeah. So if the game you're playing has changed, you can't play with the same rules. Yeah. So one of the key things I was trying to bring to the audience was this 5 new rules for wealth managers. Yeah. So that was one of my key messages, and perhaps as we go on, I can talk about that. But that was something I was, hey, the world is going to change a lot more dramatically than what you're thinking. It's going to be a different world, and you will need very different rules to compete in this world.
And I think that one of the messages before the pandemic is that we had this emphasis on AI, artificial intelligence, machine learning, and then the pandemic happened and that owned the narrative. And I feel that right now that the narrative is starting to shift in the same way that you're talking about that wealth transfer. And today that you introduced, it was congratulations, you have a release talking about how the Incedo Lighthouse AI platform is delivering and putting artificial intelligence in the hands of wealth management. So can you talk a little bit, is that the way forward for these advisors to latch on to a product that's already has some of the technology components built into that?
I think Lighthouse can be a very important enabler for this industry. I think one of the biggest secrets to success in this digital age for the advisors, or for that matter any industry, is data. Mm-hmm. Yeah. So one of the most unique characteristics of the digital age is the sheer explosion in the volume, velocity, variety of data. Yeah. And you kind of it's a great opportunity, but it's also like you start sinking in it. Hey, this is too much. How do I get my arms around it? So this is a platform which helps you get the data together. Mm-hmm. Bring it together into a sensible form where you can then do analysis on it. Yeah. Analysis, the mode of analysis is not changed from, is a lot more automated, and that's where artificial intelligence comes in to then throw out signals, helpful insights for advisors and for the end clients, which is, you may have heard of this NBA, next best action.
Exactly.
So how do you make this link from this humongous volume of data to some sensible way of putting it together into signals which finally come into NBA? So that is what the Lighthouse platform helps do. Yeah. But again, something I must say is that, while, I run a technology company and we have this platform, I think one of the issues is with technology is that putting the cart before the horse. So, the point really is that AI is important, but it's not just about AI. What is important is that, what are the specific problems you are looking to solve for your end customer, for the investor. You have to start from that and then say, okay, for this, what data do I need? Yeah. And I think that's where Lighthouse will help you. Yeah. Because if you think, hey, I have this great AI and data platform and I will live happily ever after, hey, sorry, you will be, you're mistaken. Yeah. And I think that's where, perhaps our community, the technology community has also maybe done a disservice, because often technology is sold as, hey, there is this great shiny object which will solve all of your problems. No, you first have to be very clear about the problems you want to solve. Mm-hmm. And then, and by the way, Lighthouse helps you do that. So one of the features of Lighthouse is problem identification.
Interesting.
Yeah. So, where, how do you, because we're in a very complex situation, and a very important part is to zone down on the right problems to solve. Mm-hmm. Yeah. That is harder than actually solving the problem.
Right.
Yeah. So the platform helps you do that. And yeah, so I think it's a great platform, but again, you can't see it just in a very narrow context.
I'm fascinated by a technologist who takes a first qualitative approach to what he's doing, and then reinforcing that problem statement, because there's a lot of problems in our industry right now, and a lot of business owners have a lot of competing initiatives and things with a high sense of urgency. So to have any type of technology architecture that can help you to either prioritize, think about the problem, or maybe even to Nitin, show you a problem that you didn't even know that you had, can be just a fascinating thing in itself. So if anyone wants to get more information from Insida, what's the best way for them to get in contact with you? Or the company, I should say.
We are in the digital age, right?
Yeah.
So of course, we have our website, insida.com, which is, our face to the world. So, and that lays out what the company and Lighthouse and so on and so forth. We are very accessible on LinkedIn, both the company and me personally. So I think if you try to find Nitin Seth or Insida on, if you type either my name or our company's name on Google, you won't be able to miss it.
Absolutely. I can tell you, we were stalking you before this interview and lots of things come up. So really, it's been a true honor. Congratulations on all your success. And of course, I would love an inscription in the book, and I will cherish this. Thank you for helping to change the industry in a positive way and to help all of these advisors and companies here at T3. What a pleasure.
Thank you so much, Steve.
Thank you. Wow, Henry Zelikoski, take a seat in the suite. It is so great to see you here at T3 Technology Tools for Today conference. We are excited as anything to be back in person, and we're having a lot of the thought leaders, entrepreneurs, fintech innovators such as yourself come here to kind of talk about what's going on in the conference and what you're doing specifically in the industry to help advisors. So first of all, I want to welcome you and see how you're doing.
Thank you, Tina. I'm doing well. It's my first time at T3, actually. I've been to other conferences like this, but T3 is my first time out. It's very pleased to see lots of faces that I know from other companies, but it's my first time at the conference.
I know you were actually hard to get to. We were trying to wrangle you in here, Henry. The last time you and I spoke, I think it was maybe about a year ago, and we have a lot of mutual friends in common. And what I love about this industry is how, we're all so tight and glued to one another. And you've been championing the fintech space for probably over 2 decades now, right?
Yes, we actually continued. I should start earlier, but in the last 20 years, I've been in this financial services business with lots of banking, payments, funds transfer, and wealth management. And in the last few years, it's a fintech market. More companies have been launched to financial technology as a platform as a service, but service the same end user, advisors, broker dealers, and operational staff like that.
And so tell us what SoftLab 360 does. I love the name. I'm all about branding and getting that domain name, and it is a fantastic name.
Well, SoftLab is just like it sounds, SoftLab, Software Laboratories. It's a 20-year-old business. Our name is a reincarnation of the old name of 20 years ago. Until recently, I was a CTO of StarPoint Solutions, where I ran software engineering practice. And July 2021, we separated from our parent company, became SoftLab 360. It's reincarnation of the old name I had 20 years ago. But we continued in the same realm, and we continued providing fintech services among other industries. Fintech is our largest, and wealth management in it is the largest of the other areas we cover. We also cover electronic payments.
So are you creating things from scratch for fintech companies, or how do you work with them? Do you make an improvement on something existing? Do you build something from scratch?
We are a software engineering company that covers that spectrum end to end. We design, development, innovation. Marketplace is the platform-oriented technology companies that are building. So we're an engineering team. We have to build something. We don't necessarily need to build from scratch. So on the solution basis, we can build a segment of the entire solution. We can recommend what a buy could materialize into and where the integrations are. But technically, we can build any component of portfolio accounting, performance attribution system, performance reporting. It isn't necessary these days to build anything from scratch. As we see in the conference, lots of companies offer nearly a complete solution, and many of them that I've seen from the last time I visited a conference like that, they have integrated with each other. There are more purposeful APIs, and they know how to work with each other. But the industry is still very proprietary in the way advisors service its own community. So that segment of proprietorship very often materializes into how would each advisor prefer to conduct business. Could be a proprietary process flow, could be a particular way to operate with back office. So we fill the void where a knowledgeable, subject matter-oriented team with experience of duration like ours can put together a solution that's fitting into a game plan. So I think there is, given this conference, I see lots of room still left, more narrow room, but more of specialized room, and we are a specialty firm in that area.
So what should advisors be doing? I think a lot of what I've seen in terms of fintech has been not enough willingness to take chances and to be experimental, to allocate. I wish that every single advisor in this room had, 5% or 10% of my budget is going to go to R&D and just pure experimentation, and not worry whether or not that it was successful or not, but that it actually helped you get to another, help to improve your business and help to grow. What do you think is holding business back?
I think this business in particular, I think advisors would prefer to focus on the end result. I think advisors would prefer to see, if possible, a variety of solutions that nearly the end result. I think that they prefer to maybe deal with a complete solution. I don't think it's in their purview to experiment with technology. They would rather see a technology marketplace like companies like us and product companies put together something to their liking, understanding what they need. So part of my criteria is to understand what is missing and what should be there but not there yet. I think companies like mine would be doing lots of proof of concept and R&D, and we're trying to use our R&D to offer. That's part of our technical sale. We can present what's possible, and the customer can say, I do or do not need that. And we do this R&D on the basis of what exists and what could be a missing link. And so that's my criteria for build versus buy. We're a build company, but we understand we should not be building everything from scratch.
That's so interesting. I mean, you and I have a mutual friend here, Rob Kirk, and I know that you've done a lot of work with his company, Intergen Data. They've been the recipient of, they've been a notable company. A lot of incubators and a lot of accelerators have taken notice on what they're doing. So I wondered if you could talk about, when the pandemic hit, I said that AI and machine learning were the main narrative, and then all of a sudden those words were replaced with pandemic and coronavirus. But I believe, though, that we're headed back to where we were before the pandemic, and that was AI, machine learning. So I wondered also if you could tell us how we should be thinking about it, Henry.
AI machine learning direction is very useful. I think it's not a solution of one time. It's a direction company will use. I see many companies here that already applied AI machine learning within their product. A few years ago, maybe 4 or 5 years ago, companies were trying to offer technology in this market space and hire data scientists, people who would understand how to manipulate data before machine learning can be applied. Not everything is learnable in that sense. And we do have a machine learning AI service. We decided to offer that as a service in the last 7 years. It's our technology. It's based on the Bayesian concept of Bayesian math, Bayesian logic. We implement our own algorithms and our own data science processes. We help companies get on the ground, but we offer it as a service, like a service bureau. So we discuss with customers the need for AI, those companies who do not have it yet and can benefit from an outside party being an integrated with service. So we recommend the data sources. We set up our machine learning to learn from those data sources to address few business questions that a customer asks of us. We go through a learning curve using a number of techniques in machine learning space, and we rank our results in 5 ranking categories, and the customer can understand how they can rely on that data. Once we reach consistency through machine learning, we can take new data over time and relearn and continue evolving the product towards the customer. So Intergen Data, actually, thank you for bringing this up. Intergen Data is the company who took advantage of that arrangement. and we provide data to them based on their business concept, and they take it further and they represent the end result product. So that would be actually what my direction is in this company. Besides engineering in general in fintech, we can provide the service as a matter of service plus integration. We have APIs, we have methods of returning business answers to business questions, and the rest of it would be where would the questions and answers go? How would they assist the advisor on the next step? That would be my goal for the rest of the year, actually. I'm here to identify who might be a beneficiary of that service. I think we're close.
Well, there's probably going to be some beneficiaries listening who would want to know how to get in touch with you and SoftLab 360. So what's the best way for people to reach out?
Over the internet, we're www.softlab360.com. You can also find me on LinkedIn. I'm Henry Zolakowski, SoftLab CEO.
Great, and look for him at the next T3. I have a feeling that you're going to be a staple here, and we'll probably see you on stage next year. So, Henry, it's been an absolute pleasure. Thank you so much for making the time, and congratulations on all your success. We look forward to you helping to create the companies and the business owners that are here with doing some really, really cool stuff that we can all learn from.
Thank you, much appreciated. Thank you.
You're listening to In the Suite, a podcast that shares amazing stories of women in business in the financial services and the wealth management industry. Our producers are Tina Powell and Kevin Hirshorn. Our editor-at-large is Kevin Hirshorn. Our content writers are Dimple Rashandani, Daniel Wheeler, and Tina Powell. In the Suite podcast is sponsored by C-Suite Social Media, a high-growth digital marketing and social media agency for financial services and the wealth management industry. You can visit csuitesocialmedia.com to learn more. And thank you so much for listening and subscribing and giving us 5-star reviews. We've got leaders in 1,000 and listeners in 1,170 cities and 60 countries, and we greatly appreciate it. Please know we work so hard to produce each episode to make it the very best for you. So please let us know how you enjoyed this episode from the 2022 T3 Advisor Conference and Enterprise Day, and share your thoughts on LinkedIn and Twitter and Instagram and Facebook on social media, #InTheSuite. You can follow T3 on Twitter at T3 Tech Hub and visit t3conferences.com. And always, if you would like to share the name of a special leader that we should consider interviewing in 2023, please send it to me at Tina@InTheSuite Podcast for season 4. Again, thank you so much for listening and subscribing to In the Suite.